So let's again recap both scenarios. You can have a bullish scenario that we will be trading, and then you can have a bearish scenario at this level in the 200-point moving average. Let's look at what we will be trading in the first place. What we will be trading is not labeled on the 4-hour charts, labeled on the lesser charts, but it really means that we have already finished level A. If this is a bullish scenario, you have finished level A here. All right, you are doing level B in yellow. That level B can actually reject at the 200-point moving average. Below that internal level 1 can move higher. There's no problem. It's a level B. It can take out level 1 and take you all the way to these projections. That B here in yellow actually does an A in white, a B in white, and the C in white. So there is an A and a B like you're seeing here. Now that C did a 1 and a 2, or an A and a B. It is doing a 5-swing C. All C's are always have to be 5 swings. So we have a 1 and a 2 here, a 3 and a 4. Market is doing that 5. That's why we're seeing bullish momentum on the 4 hours and on the 1 hour. You see, this kind of C does not look back. You really would always, the retractions are going to be very minor, like we're going to be seeing them now in the 1 hour. You get some kind of an ending diagonal. It will terminate above the 200-point moving average. We're looking at targets 163.33. We're looking at targets 163.92, 164. We're looking at targets 165.2. All of these are just wave B. It becomes an A, B, C. We have another head. Market rejects, move down into C before it does that higher degree ABC inside the ending diagonal that we're looking at on the weekly chart. We want to relate this, of course, to what we're saying on that weekly chart. So, that weekly chart, we're here. So we're doing an A and a B and the C. Probably get back to here. Then we do a 1, 2, 3 or ABC. Very big ABC all the way to 176. All right, let's take a look at the internals now, the actual trading internals. So this is the, sorry for notifications. This is the bullish picture. What about the bearish picture? The bearish picture is that we get on the 1 hour momentum termination at that point. Maybe the 200-point moving average of the 4 hours below level 1, maybe slightly higher. We begin to see negative degree 3 momentum on the 15 minutes. We begin to see negative degree 1 momentum on the 1 hour. You know this has become a level C. It's a termination. We are moving inside of a wedge, very likely to. It's a very strong run down, sudden, because we are at the top of the wedge. That's why we have been actually selling at these 2 levels here. And this takes us all the way down to test level. Level 1 is 153. Over here, it is, of course, degree 5. A lot of fundamentals can move this market. You're looking for NFP numbers on Friday. If they are bad numbers, you will find the rapid depreciation in sterling against the yen. This is a funding vehicle. If there is dollar strength because of the PMI numbers, you will also find some kind of weakness in sterling against the yen. If we are already short at these levels, or at least at 160.7 and 160.8 and 161, we go out on a retraction. We do not close out on a negative reading because we know that we can retract actually at level 1 or slightly higher. I don't believe we are already short at that high degree level 1, so we will abandon, cancel out all short orders for the time being at that white one, which we're going to be coming in at 162 and 162.3. So I believe we'll only be holding half size shorts. As we move on, we'll be now switching to longs and holding that half size short as a trading and money management procedure. Let's take a look at the internals. Right, the internals here give us a trigger. So we should have a arrow here, you know, this kind of trigger now by heart. All right, this is an internal 1, 2, and we're moving into a 3. We believe the market is actually moving into that internal ending diagonal, can give way to a higher degree ending diagonal. Remember, there's already been an A and a B. You're looking at 1, 2, and 3, 4. There's a 4A, 4B, and 4C. Market is going to be 5. Instead, 5 is going to be 5 swing. It's a wave C. That's all there is. That 5 swing is really doing wave C into B. You can see the targets 164.2 163.20, 163.5, 165.55. Very lucrative targets. These are just only 127.2 all the way to 161.8. Again, we have a trigger, and that means there is a neckline here. Market will not be looking back because we have positive momentum. This is how it works. This is how the internal cycles function. We have to really digest this and use it to our advantage. You're having positive momentum on the 1 hour, you're having positive momentum on the 4 hours, both. Okay, so this means that we get a 5-wave structure into this wave 5 in red, all right, into that wave C in white. It's now doing, I believe, either wave 3 or just wave 1. Wave 1 is usually the strongest inside an ending diagonal. So we'll let it run its course. On a retraction, we buy tomorrow the pivot or the internal S1 level. This is still, if this is a wave 1, it still has another 2 and the 3 and the 4 and the 5 to go. Again, wave 1 is usually the sharpest and the strongest inside of an ending diagonal. So this is still the very start of the move. We can trade it, I believe, until NFP at least. If the number is good on Friday, this will also be moving higher. Or we'll do the targets that we're showing here in that 1 hour chart. 164.2, 163.5, 165. All right, let's take a look at the 15-minute. This is today's 15-minute chart. The time was a bit earlier, of course, and at that point, the market was only doing 160.76. It was actually just bouncing out of the pivot level. That is your pivot level here. We had that bounce out of the pivot level. Once we have a bounce out of it's early Asia time, yes. But once you have a bounce out of the pivot level, when you will be doing this as we move on, and it's on positive momentum on the 1 hour, on the 4 hours, then of course you buy immediately because also positive momentum on that 15-minute chart. There isn't even a retraction, and therefore the market is along from pivot to pivot. It becomes a very simple trade. Did that one from pivot to pivot, we just have a spunk entry right away, market price, right? And we are at that time guaranteed that we're going to R1, 160.87. You can go in size, all right, at these levels and even not take profits at 160.87. Take it 50% between R1 and R2. Market, I believe, is now even above R2.